Morning all, how are we doing? Morning ladder. How's everybody doing this fine Euro rate announcement day? Big one today. Rate announcement for the Euro. What we've been waiting for. See what happens to the market today. Should be a big one. We'll start off with a recap of the news and have a look at what we've got coming up today. Then we'll do a little dissection on yesterday's complete and utter nightmare. Basically went down 2.87% yesterday, which was a fantastic result because I was down 6.66%. The devil entered my terminal. Yeah, I clawed some back scalping yesterday. Emergency measures called for emergency actions, so I scalped some back. I've got a scalp on this morning on, well, it's not a scalp, it's more of a normal trade really on oil this morning to try and claw back that loss from yesterday. It'll either work or it won't. If it works, fantastic. If it doesn't work, no problem. I'm going to stop out of all oil, get out of it and make another loss today. I'd rather be flat oil than trade it anymore. It's one of those instruments I'm discovering a little bit like oil. But anyway, we'll go into that in a second. Morning Diamond, morning Themba, Evil, Trevor. How's everybody doing? Excuse me, I'm a bit sniffy. I've just come back from my spin class and I sweat for about an hour. I can't stop. So everybody knows this morning. Calendar. So today we've got we've had low speaking this morning. That's another thing that's annoying me at the moment is the pound odd. It's back in profit again. I watched this thing yesterday. It literally went from negative $100 plus $100, negative $100 plus $100. This morning it was negative $100. Now we're $35 in profit. I'm about to get out of it. I've had enough. So I'm going to have a look at that in a minute as well. But that one's another one annoying me. So obviously Lowe's said something this morning that's helped that. So yesterday we had the CAD. Rates came out as expected. Very lackluster response from the market to this one. We didn't get an awful lot of movement on the CAD, which I'm not particularly surprised about. It is as expected. The market has factored in, I think, that announcement, and that's basically what we got. We got what we expected, which was, yes, they're putting the rates up, which is fantastic. We had everybody gave us a shock last time. Not a shock. I mean, everybody went a little bit more than expected last time. So, but typically, they're pretty spot on. The Canadians with their rate announcements, very stable. So I'm not surprised it came out as expected. And it is a lovely increase. It's a 0.75. So they are keeping on top of inflation. Well, they're trying to keep on top of inflation by increasing interest rates. So it's all going pretty well. IPPMI came out positive as well, which is a nice positive move as well. But we didn't get a lot of reaction. So monetary policy yesterday, pound dipped to the low from 2000. Morning, Fabio. So pound hit the low point yesterday from 2020 rather. Got a nice bounce off of it, as you would expect. A lot of limit orders sitting down here. So we'll see what happens there. This is obviously COVID. So this is the COVID lows. It's not quite as clear on the weekly chart. Let me put it on the daily and it'll become more obvious. So there's COVID. And we've hit COVID. Obviously completely unprecedented. No idea what's going to happen from here at all. But we have hit a significant level down here. We've got the rate announcement for the pound next week. And I keep trying to say Theresa May. What's her name? The new one. Oh my God. I should know who's in charge of our country, shouldn't I? Begins with a T. Bloody hell. Anyway, the new one in charge. What's her name? My brain is gone. It's too early in the morning for this. Anyway, she's going to be talking this morning about the new what would you call it? I suppose the monetary policy, if you like, in place to combat the fuel poverty problem that we're experiencing. So just scanning through to see if there's anything overnight we need to pay attention to. Liz Truss, there you go. Thank you, Trevor. It began with a T. I haven't said her name enough yet for me, because she's a complete unknown. Before she started running, she was a complete unknown. To me anyway. Russians claim that the yuan is the primary alternative to the US dollar and the euro. Let's say yen. That's worse than forecast for the yen. GDP's up. Forecasting increase in GDP as well. Okay. Yeah, so I'm just digesting news. I'm a bit late behind this morning. So obviously with the pound being down here and getting this bounce, with what is going to be announced by Liz this morning, Liz, as if I know her, Mrs. Truss, there is a good chance the market might have a positive reaction to this, because the what she's putting in place, obviously one of the main drivers of inflation is energy, and one of the main causes of recession and people's belts being tightened is obviously bills going up, inflation going up. If she can get on top of the biggest one of those, which is the energy crisis, that is going to have a positive impact on people's pockets moving forward, which is going to mean the economy won't slow down quite as much. We're still going to go into a recession, but hopefully if she can get on top of that, the recession won't be quite as bad, which will be positive potentially for pound. So it's all being announced this morning. It's already been announced. We know what measures have been talked about. It's all been leaked already, but it hasn't been officially put in stone yet, which is what's happening today. So the fact that we got down to this level and we happen to hit this level at the time where we're getting some positive talk coming out, I suspect we may well get a positive move. That's one of the reasons I'm looking at this pound odd and I'm getting fed up with it, because I suspect we may get a little bit of strength coming on the pound. We might not, but we might do. So I'm just going to break even stop this thing, because yesterday it went completely, it just did me a head in yesterday. I mean, literally in profit, not in profit, in profit, not in profit, in profit, not in profit, in profit. Make your mind up. Either go and hit my target or just don't bother. So I'm not going to muck about with it. Too dangerous at the moment with the pound where it is. So I'm going to flatten on that. Morning, Neo. So that's yesterday. If we have a quick look at the CAD, the CAD basically yesterday had I mean, the US dollar came down quite a bit yesterday at the end of the day. If you look at all the other CAD pairs, it was quite whippy, quite a lot of movement, but nothing, there's no huge ADR spikes or anything. So the market yesterday just absorbed the CAD rates. It's business as usual on the CAD. With what's going on with oil at the moment, I have no idea whether we're going to see a strong CAD moving forward, because at the moment it's difficult to tell what the hell is going on with oil. So I'm just watching the DAX this morning. I've got a feeling we're going to have a down day on the indices today. We've just gap filled on the DAX pre-market open, so I was just seeing what was going on. I've got US 30 on there because I was scalping the hell out of that thing yesterday. Tempted to take another DAX here. It is a bit close to the previous. What I'm going to do is, because I put a manual on yesterday, I ballsed up yesterday on this, put 2 entries on. I didn't think I was going to get an alert trigger. Sometimes with the EA, it's so close. Basically 134 is the entry point, which is what, if you look at this, it's 133.8. I mean, that's not exact, but basically it was yesterday, it was virtually to the pipette as to whether or not I was going to get a reversal alert on this move down. I measured it and I thought, unless it gives me a reversal alert literally to the pip, I'm not going to get a position on. So I took a manual because I wanted to get the position on, and the EA actually took the trade because it was virtually exactly half an ADR away. So I got 2 trades on. I didn't notice until it had pulled back that I'd done it. So I want to get another position on here just because I think we're going to get some downward momentum at some point today. So I'm just going to put a pending under this M15 reversal here, which is going to be a little close, but I want to use this to sort of scale out of that one. So so I'm just watching on my other chart, my other monitor, what was going on with the indices this morning. Morning, Sammy. Morning, Wilson. So yeah, so that's news from yesterday covered for the CAD. This morning, we've had obviously low speaking. We've got the euro rates at 115. So this is the big one. What's going to happen today? I have no idea. If this comes out at 1.25 today, I get the feeling we might get a drop in the euro because I don't think that's enough. They've been flat for 6 years on interest rates. The euro's been devalued for many years, and inflation is rising at an unprecedented rate. They've got problems with supply of oil and gas. There's so much going wrong at the moment in the Eurozone, and the last thing they need is inflation running away from them. Going up by 0.5%, 0.25% is just not going to cut it. And 0.75%, which is their new revised increase, I don't think the market is going to look at that and think that's going to cut it either. I think they need to go higher. So one or two things I think personally this afternoon is going to happen. We're either going to get a 1.25 and a drop on the euro, or we're going to get something like a 1.5 and the market is going to react favorably towards it. If it goes any more than 1.25, which is 1.5, which I think is unlikely, we're going to get a missile shot on euro. It's going to go off the charts. But I don't know what's going to happen. They shocked us last time. The Swissies shocked us as well with a 0.7 increase, which we weren't expecting as well. So I get the feeling there is a possibility of this going higher. There's been talk of 1.5 increase overall, which would take us up to 2. I don't think that's going to happen, but we'll see what happens. So this is the big one this afternoon. If it comes out as expected, then I don't think we're going to get a massive reaction to it, because I think the market has factored this in. If you look at the euro pairs over the last few weeks, you know, we've had this move when they started talking about it. We've factored in the fact that we're going up in rates. How much of this is factored in as 1.25, 1.5 or what, we don't know. So if the market thinks, well, yeah, that's not going to cut it, we're just going to get a continuation downside moving with the euro pairs. So we need to see what's happening with it. So we've had this lovely pullback at the moment. It could well be a continuation short, but I'm not going to really leverage into anything at all with the euro until I see what's happening. I've got my euro New Zealand on, which is my only position on the euro at the minute. I've got 4 positions on that. One of them I've done drawdown control on because it's been running away for a few days. And I took this last week and I was like, I'm going to regret this when I took it, and I'm regretting it. So I kind of knew this was going to happen. I stupidly thought that they would just carry on as normal until then, but they haven't. So interesting day for me today. I've got a DAX on short. So when you get a currency moving hard in one direction, you tend to get the index for that currency moving in the opposite way. That's what normally happens. It doesn't happen all the time, but you tend to get that negative confluence with them. So what I'm expecting to happen today is if we get a strong push on the euro, we'll get a drop on the DAX. So that means that all these DAX positions will come nicely into profit and the euro New Zealand will go into a little bit more drawdown, and vice versa. If the euro drops, then the DAX is going to push up. But I'm not worried about the DAX pushing up because the DAX obviously is coming down, as we know, because it's in a massive bear market at the moment. So yeah, it's fine. It can have a little bit more of a push if it wants to, but we are going to start a new leg. Everybody knows we're heading into a recession. In recessions, you don't have bullish markets. So we should be good either way. Well, I should be good either way. But we'll see. We'll see what happens. So there's your news for today. You've got the press conference afterwards. So what we need to watch out for this afternoon is 1:15. We're going to get the rate. In fact, what I'll do is I'll do a live room this afternoon at 1:50. Well, I'll come on about 10 past 1, 5 past 1. We'll do a live room. We'll watch it. And then we can see what's happening. What you tend to get is a movement off of that news, which is a spike. And then you'll get either an accumulation happening, or you'll get a very, very small movement sort of like that, and nothing will happen. Then you've got the press conference. So whatever happens in this news, we've got the press conference following. Press conference is where everybody's going to be asking all the questions about why did you do this? Why didn't you do that? What's going on with this? What's your plans now? And that sort of thing. And that is where the market is going to be paying attention to the press conference, because the press conference is where they're going to announce future monetary policy, which is going to affect where the currency is going to go for the next 3 to 6 months. After that press conference, we've then got Powell coming on, and Powell is going to talk about what's going on with this as well. So the euro is obviously going to affect the US dollar. As one currency is being pumped one way, there's money coming out of the other one. So what Powell's going to want to do is be bullish probably on the US dollar if they're bearish on the euro. If they're bullish on the euro, he's going to have something different to say. So there's going to be a lot of push and pull this afternoon happening with the euro. So we could see some fairly volatile markets. So I wouldn't be surprised if we see a fairly flat market this morning. So be prepared for all of that this afternoon. It's going to be potentially a biggie, but it could also be a complete flat nothing, because the market's already factored all of this in. So we will see. You can never tell what's going to happen. Morning, Rocky. Extra live room. So I'll do I'll come on at about 5 past 1 or something. I'll put it in the Telegram group, and I'll schedule it on YouTube so you'll get a reminder. When would they announce any future rate hikes? So the future rate hikes will basically be over the next couple of weeks. They will be thinking about what happens. So what they want to see when you do a rate hike, what they're looking at is what impact is that having on the market? What impact is that having on inflation? You won't know that straight away. So what you'll find is over the next couple of weeks, you'll have talk coming out about what we're thinking of doing next after the initial reaction to this. But they will have a plan in place. They always have a plan in place. So you don't sit there and go, right, we're going to go to 1.25, and then a couple of days before the next rate announcement we'll have a think about what we're going to do then. They will be thinking, right, plan is by the end of this year we want to be at 2.5%. How are we going to get there? Are we going to go in 3/4 percentile? We're going to go 1 percentile? What are we going to do? So they'll have that plan in place already. And this is where the press conference comes in. Lagarde will probably confirm what their final quarter expectations are for interest rates and for inflation. So they may well come out and say something like, we see interest rates hitting 3.25 by end of year. So the market will look at it and go, right, well, we're in September. We've got October, November, and December. So we've got 3 rate hikes ahead of us. So let's factor in 0.75 on each of those, and we should get up to target. Is that what you want to do, Mrs. Lagarde? And she'll go, well, we will see what impact it has, blah, 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 blah. And they're always, politicians and bankers, they're always woolly about everything. But we'll know what they're planning to do. And the market will decide whether or not they think that's enough to get on inflation. If it's not, it will react negatively. So again, we don't know, but there'll be a lot of clues in here. The Fed will then come out and say what they're planning to do. And if they are super bullish and say, all right, that recession isn't going to be quite as bad as we thought it was, interest rates aren't going to go up quite as far as we thought it was because inflation seems to be flattening out, the US dollar will be pumped. To pump the US dollar, you need to take money away from other currencies like the euro. So the euro may drop and the dollar may get pumped. Yeah, so it's all the push and the pull. There's not an infinite amount of money in the market. Yeah, you've got a certain amount of each currency. That's dollar as well. That should be a pound sign. Can't draw a pound sign. Let's try again. I can't draw a pound sign. That's a euro. That's a pound sign. There you go. Let's do a little swizzly bit on that. And the yen, rather than the yen. So there's a finite amount of money, and if some institution wants to invest speculatively a lot of money in the pound, they're going to have to pull it out of other instruments to put it in there. And this is what we're seeing with the yen at the moment. There's a lot being pulled out of the yen. We can see that because everything's going sky high against the yen, isn't it? So money is being pulled out of the yen, which makes me think that there is potentially speculative money going to come forward for the euro this afternoon. But again, we have to wait and see. This is why fundamentals are so important. You've got to know what the market is going to do and react to these sorts of things. You can never tell, and this is where the COT report used to be so useful, because when you had these fundamental shifts, the week after you'd see the COT report reflect where the market is positioned. That stopped with COVID. It sort of the COT report became a lot less impactful. And that's why I stopped paying so much attention to it. I haven't looked at it for weeks, because you're finding that speculative money is not being reflected in the same way as it used to, because the world order has changed. Everything's changed in the last couple of years, but we still have to pay attention to what is going forward. Remember, I keep talking about these scorecards that the institutions use. This is a main factor for the scorecarding system. What this comes out as will give a positive or a negative slant on the scorecard of anything up to 20-25% of the total sort of score, if you like. So this comes out super positive. The analysts will be telling their traders to buy euro, and it will go up, and it could go up for weeks and months. But again, we will see. The initial reaction this afternoon should give us a clue. So we'll find out. But a big day today. And then tomorrow we've got unemployment as well. We've got the pound next week, which we've got new government in charge. So they are going to want to make an impact. They're going to want to make a change. So I get the feeling we might see something more than forecast on that as well. We're 1.75 at the moment. I have no idea what the forecast is going to be. We'll find out on Monday, but we could well get that increased. Bailey had a meeting with the new Chancellor, Kwasi, yesterday to discuss monetary policy. So no idea what came out of that meeting, but we'll find out next Thursday. So big day today. But like I say, could be flat as a pancake. We will wait and see. So news results are pre-planned according to liquidity on the charts. Yeah, I mean, all news is an opportunity to manipulate the market. There's different types of news. Things like non-farm payroll are what we call reactionary news events. GDP is a reactionary news event. So when you see GDP figures come out, you normally don't see a huge change in market structure or a big change in trend direction, because it's a reactionary. GDP is a reaction to monetary policy. Non-farm payroll is a reaction to monetary policy. Interest rates are precursors to monetary policy. So what the interest rates do is affect future monetary policy. Inflation figures affect future monetary policy. If inflation comes out higher, interest rates will tend to go up. Therefore, some of them are predictive in the fact that we will change direction of a currency with them, and interest rates are one of them. But the market will always use news events regardless to manipulate the market, which is why you see a lot of the times you see fantastic news coming out. Canadian dollar, prime example yesterday. You look at when the IV PMI came out as positive yesterday, yeah, and we had the overnight rate on the CAD. So that's all positive stuff, yeah. Look at what happened when that came out yesterday afternoon, which was somewhere around here, yeah, virtually nothing, and then we had a little trickle down. So strong for the Canadian dollar, but not off the scale strong. And we didn't get that fast, hard manipulation that you expect on news. We just got a positive reaction because it's all good. But it's not. Sometimes you'll get the same news come out, and the market will just put in a 5-minute candle like that, accumulate, and then disappear. It's all manipulation, and it really depends what the banks need to do. And this is why you tend to get an accumulation before a news event, because the bank is just building a position in one direction. They use the news event to move it, and then they'll move it back. So they'll reach for liquidity, take it, and run back with it to make their profits. And it's just all manipulation. And they're the only people, there's only 10 of them that can do it. 10 institutions hold the purse strings, and they're the ones that make the market move. No one else has got enough lot sizing to put in the market to actually affect the direction or paint a candle. If I dropped my entire account short now on US dollar CAD, it wouldn't bat an eyelid, it wouldn't even move. So the amounts of money we're talking in billions. So it's all manipulation news. You just need to get a clue for what they're doing with it. If it's news that shoots the wrong direction, 9 times out of 10 they're just reaching for liquidity. So when you hit that liquidity, sell it, because it will fade. You just got to see what happens when the news comes out, rather than what most people try and do on the news is try and put an order in and get gathered up on the news. What they get is whipsawed usually. Best thing to do is see what the market does, and then after the news event you'll have a clue as to where they're going to go. A lot of the time, but it's just at the moment it's very difficult to tell. I'm just going to short the DAX. I've just taken a short on the DAX on my other account. So looking at yesterday, and yesterday as well, I got to a point yesterday where I scalped this account back, and then I went onto my funded account because I've just been paid, which is nice, and I lost $1,800. So yesterday was that was the point in Telegram I put out, the everything I touch is turning to crap comment, because I just dumped $1,800 loss on my my Forex funded account scalping, but I made it back in here. So yesterday basically was oil. I won't go through every trade I took yesterday because there's too many of them. We are, where are we? 7th. Yeah, look at all this lot. Whoops. That's yesterday's trades. I'm still there, still there, still there. Yeah, there you go. So that's all the trades I took yesterday. All that lot. So you can see my scalps in here, last buy, current buy, market buy. So I scalped the Dow yesterday. I absolutely caned the Dow. I took 1,000 out of it there. I took 300 odd out of it there. And I took 2 grand out of it there. Lost 500 odd on NASDAQ. Yeah, and I took all that loss on the oil yesterday. So that was the loss on the oil. When oil tanked yesterday, I won't go through all the trades because there's just too many of them. When oil tanked yesterday, I was not expecting a fall below 85. When we got below 85, that was it for me. And it wasn't so much the fact that we dropped below 85, it was the speed at which it happened. So you can see the market in London pushed up, and I was like, brilliant. And the thing that really, really annoyed me yesterday was I had over $600 of profit there, sitting there. And I was like, we're going for the highs. And I put the chart in Telegram. What I was expecting to happen was a push above that high, fallback push yesterday. That's what I was expecting to happen because we bounced off what I was expected to be support. And then that happened. And it didn't just get down. It then... remember, I talk about a lot. You get that pop. Yeah, it didn't just go through. It popped, and it took the lot. It absolutely collapsed. So all these pending orders got triggered short. I don't like this down here at all. We're nearly down to $80 a barrel. We're at $82 a barrel is what we stopped at yesterday. Yesterday's low. So I took all the loss off yesterday. and took the hit on it because I'm wrong on oil. And when I'm wrong on something that I'm new to trading, I'm wrong and I'll get out. This is like gold. And the reason I don't trade gold, as you know, if you've been in here for a while, because I've said it many times, is it has these crazy days for virtually no reason whatsoever, where it will just move so fast and so hard, and then it will do it for a few days and you can't get out of positions. And that's why I stopped position trading gold, because I got stung by it too many times. Oil has just started doing exactly the same. This is exactly the same thing that I find gold does. And for 2 months, I've milked 15-20% out of this thing. So it's been really good to me. I took a 3% loss off of it yesterday. Potentially, I'm going to take another 2 to 3% today. So I've classed that as a win, coming out about 15% up, 10%, 15%. I don't know what the exact figures are. I will look at it at some point. But if I come out of it with a win, which I will do, I'm more than happy. But it's going on my naughty list. I'm not going to trade it anymore. So today, it is crap or bust on oil. The positions that I've got on, I took all the ones off. Let me just put them on there so you can see them. All these oils, I'll show you all of them, because these are all aggressive positions. These ones that I'm putting on now. Yeah. That one. That one. That one. I think that's it, yeah. So those are the aggressive positions that I had on. Yeah. So those were the ones from the previous day. Yeah. That was the large one that got stopped out and then it rallied. At that point, we pushed all the way down. Yesterday, you can zoom in a little bit more on that. I was trying aggressive positions over and over again. Every time it looked like we were potentially finding a bottom down here after this drop. What I was expecting was this propulsion gap to get traded into. Yeah. So what I was doing was every time we got down and hard and we got some bullish price action, I was getting in. Yeah. Stopped out. Massive bullish engulfing in, scaled in, out, stopped out, pushed up, stopped out, just got stopped out over and over and over again. So this took me about 2.5–3%, which I scalped back out of on the Dow. So this morning I have that was taken with the EA overnight, which is fine. That one I put on yesterday down here. That was the one that survived on this push. Yeah, stop under the low. And I've got an add on this reversal alert on M15. Yeah, so I'm taking a second position there. Stop under the low. If this comes down today and we break yesterday's low, I'm out of the lot. I'm just going to shut it all down and I'm done with it, because I've had enough of oil, to be honest. So either we're going to push up and fill this gap, in which case that is roughly $1,000 for me. That one's 900 odd. That one is, so it's about $1,800. So that will get back all yesterday's losses and some. And it will put something in the region of 2% in the bank for the day. So that's my plan. It will either work or it won't. So I'm either going to go for a complete recovery of yesterday's losses, or it's going to be a small loss again today. I'm still up for the month. You know, I'm still up 2.3% on the month. We're a week in. So if I can pull back something in the region of a 6 to 10% month, I'll be more than happy. So it's not the end of the world. I've obviously got some drawdown on some of these positions at the moment anyway as well. I'm just about to get stopped out on pound odd. So DAX, I've got a couple on. Euro New Zealand, that's the main worry at the moment, is the Euro New Zealand because of the rates today. So we'll see what happens with that one, and obviously the DAX. So I should get one of these into profit either way today. That's coming down nicely. US dollar Swiss, I've still got that one on. Nice profits yesterday out of US dollar Swiss, which helped a lot. So I got a lot of banked a lot out of US dollar Swiss yesterday. These ones here and these ones here. So I took some aggressive positions yesterday on US dollar Swiss. I did a little bit of drawdown, as well on US dollar Swiss yesterday. So closed out some there, and I did a bit of drawdown control on that position. I think that was 15, and I took that down to a 10. And then I closed out these ones down here as well. So some really good good trades yesterday. So, and that's the drawdown control position on, yeah, that one there. And then I had two positions, one there and one there, which I took off. So you can see I've been doing drawdown control on this, but this came out of this high. Remember I said I posted this in the Telegram group yesterday. As soon as we took that high, I was in aggressive on this. Oh, sorry, no, it was just before we took that high. I got in aggressive on this, expecting a triple top to get swept and then drop, and we got that beautiful M shape and dropped. I got out way too early yesterday. Wasn't expecting it to drop quite so far, so hard. But yeah, lovely moves down yesterday on that one. Within an ADR now, so I'm holding that US dollar Swiss. Outcome on this one today will be potentially a drop. If we get the euro pump, Swissy will probably get dragged along with the euro, in which case US dollar Swiss is going to come down hard. So again, I've got lots of things that I'm hedged basically. Euro, whatever happens with the euro today, either this is going to go into drawdown and that is going to go into profit, or that is going to go into profit and that is going to go into drawdown. So it doesn't matter really to me too much what happens today. I'll probably end up at the end of the day in a similar sort of drawdown, but I should have some decent profit banked as well. So we will see. Pound odd I'm about to stop out on. I'm just going to shut the EA down on pound odd. 1 second. Where are we? Pound odd, close, and oil, close. So not trading those anymore. Sammy, should I take off US dollar CAD and US dollar Swiss? You're short on them, I presume. US dollar Swiss, up to you. Depends if you're on profit or not, really. Looking at it, the reason I'm in this is because of this massive push. Look, I mean, we've had 3 solid weeks on this rally, and we've come up into this resistance from there beautifully 4 times. You remember, I keep saying this, and it's something that's stuck in my head from one of the mentors I used to have. Price knocks on the door 3 times. The 4th time, it either smashes through that door or it's a metal door and it can't, and it gives up. This was the 4th hit. It's given up. We've got this massive move where we just had a push, accumulation push with no profit take. So this to me is the profit take move on here. So I would suspect, and obviously, you know, we are in a downtrend on this, a gradual downward channel. I would look at this from a fib perspective and look at where we're potentially going. And there's no reason why we shouldn't be getting down to these sorts of levels. If we're going to put in a shallow pullback, we should be at least coming down to this accumulation here. Yeah, or that sort of support level. Yeah, which is 38 retracement. So I think we've got at least that much room. We've got another half an ADR to an ADR, I think, to the downside on this still. So I'm not overly concerned about it at the moment. I've got a position, I've got 2 positions in profit, or no, 1 position in profit on it. And these have all had drawdown control done at some point with profits anyway, so I'm not that worried about that one. US dollar CAD, again, same thing. We've had a lovely double top put in, triple top if you like. Canadian dollar is weak at the moment, but we had positive news on it yesterday, so potentially that it's going to really depend on what Powell says this afternoon. Really wish I'd have added to that short. I'll take that. So yeah, I don't think it's particularly either way US dollar CAD. It's kind of a long against a long, and we've had positive news on the CAD, so I don't see the CAD weakening, but then again I don't see the US dollar particularly strengthening either. So it's one of those where I think if you're getting in nicely with your positions and spacing nicely, you know, getting short, out, getting long, out, getting short, out, I think you'll be okay either direction on this one. For me, it was a short up here, obviously, because it was extended. So I think you're fine on that. You're in profit on both. Again, up to you. What's your profit? What, you know, this that's the one I can never answer. You know, should I take profit on something? I don't know. Do you feel comfortable with your profit? Are you happy with your profit? How's your month going? How's your week going? Have you got 1.5% and your target is 1% a day? If the answer is yes, bank it. There's never a doesn't matter what you do, and this is something you only get from experience and taking thousands of trades. You'll never know when to take profit, and whatever you do when you take profit, it's going to be wrong. You have to accept it. You're going to be wrong. Yeah. Look at my US dollar Swiss yesterday. I was totally wrong on profit taking yesterday on this. Look at that. What an utterly stupid thing to do. Take profit there. Was I wrong? No. Banked 2.5% on that. It's totally right, because that's what I needed to do right then. If you were in 6% drawdown on this with 2.5% in profit, it was the right thing to do to leave it on. For you. For me at that particular point in time, it was the right thing for me to do to take it off. And I posted it in the Telegram group why I took it off. Yeah. I put a trailer on it because I was expecting a buy reaction at that support. And that's exactly what we got. And that's exactly why I got out the trade. Because what I was expecting to happen happened. What I was expecting potentially to happen was a pullback into the propulsion gaps. What we didn't get was what I was expecting. We got a further tank, which is fine, which was lovely, because I still had positions on and I got out of them. But whatever you do, it's going to be wrong. Because if you take it off too early, you're going to kick yourself because you're wrong, because you should have let it run. If you don't take it off and it bounces back, you're going to be wrong, because you should have taken the profit, like I was on oil yesterday. Yeah, I was totally wrong on all of the long positions I had on. I had $600. I was watching it in my P&L yesterday on my other monitor. I was watching it thinking, I've got $600 there. And I thought, shall I take that? Nah, I reckon they're going to break that. And they're going to pop it. And they're going to come up for these highs. Did they? No. Should I have taken that? Yes. Was I wrong? Totally wrong. I ended up taking a loss on every single one of those positions. But you're never going to have the right answer. You're never going to have it right. Your entries are always going to be wrong. You're never going to catch an entry. You are occasionally, and I've done it. You're never going to catch that entry. You'll catch it up there, or you'll catch it there. You're going to draw down on it and sit in accumulation for a day before it moves. The entries are going to be wrong. Your exits are going to be, everything's going to be wrong. Your goal as a trader is to extract as much of this you can and put it over here. How much of that it is going to be totally different for everybody. There is no way of telling anybody where they should take profit. Yeah, I thought yesterday, and you'll see people doing this in Telegram groups and in Discord channels, getting in short here, stop above the high, profit is there. Do you think they're happy if they take profit there? No, they're kicking themselves, driving themselves nuts. What they should have done is taken profit down there. Did they know? No, no one does. You just got to take it when you think you're ready. There's no, unfortunately, playbook for that. Pound odd, just about to stop out. I've had enough of that thing. It's just driving me up the wall, this pound odd. Look at it. It's just can't make its mind up. I've got a feeling we're going to go into an accumulation on the pound for a week until next rate announcement. What if a trillionaire put all of his 6 lakh US dollar, or the amount he can, in one direction? It will not be retail versus market makers. It will be trillionaire versus market makers. Yeah, you're talking about the if you dump all of your money into the market, you won't move it thing. Yeah, that's if you've got a trillionaire doing that, then yes. But I would suggest that that trillionaire is actually having his funds placed by a hedge fund, in which case they do have, and he will just be part of a transaction. So, but yeah, we did it. There was a group I was in on Forex Factory, and we timed a short together on a really illiquid market on the ZAR. We were trading the US dollars. I've got it there. We were trading the US dollar ZAR. Yeah, this is a massively illiquid market. It moves 2,421 pips a day. There's no liquid in it. Yeah, it's just, you see, look at the spread on it. It's awful. We dumped not insignificant sums in the market. There was a good 20 or 30 of us to see what happened, all with the same broker. Nothing. We got out very, 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 very quickly. With a loss, I hasten to add. But you can't do it. There's lots of people, running sort of these. There's a lot of people that worry about systems and strategies and EAs. If enough people get hold of a system or a strategy or an EA, it will stop working because the market will identify it and it will stop it working. That's not going to happen. Do you think the market could give a monkeys if there's 1,000 people trading the same strategy with the same EA making money? The market won't even notice. This is a $7 trillion a day market. It hasn't got a clue who you are. It doesn't care, unfortunately. My profits aren't enough. Going to let them run. They're both in good profits. I doubt it's going to explode to the upside. Yeah, so Sammy, the answer to your question is, if you're not happy with it, don't take it. But always remember, yeah, you can take profit. Yeah, let's say you've got a position here and a position here, and you've got some down here. These two are in profit right now. You can always put them back on. Worst case scenario, you take them off now and it tanks. What's going to happen? These positions are going to go into profit. You win. You've banked. You win. Worst case scenario, it pushes back up here. You add them back on again and it tanks and you win again. So don't forget, and you see me do this all the time. I bank some, I put it back on. I bank some, I put it back on. I bank some. If it goes into a range for a year, I'll be a millionaire. Doesn't do that. We'd not be if it did, but so you can always put it back on, don't forget. So if you want to take it and put it in the bank, do it. If it pushes up, add it again. Entirely up to you though, obviously. Trevor, I exited early, US dollar Swiss in exactly the same place. Yeah, it's just, I mean, this move here, I was worried. If you look at this, a slightly zoomed out view of this, we've got a multi-day accumulation here. So we've got 1, 2, 3, 4. We're on a 4-day accumulation, pushing down towards the lows. What I was worried about was this becoming support for the range and us remaining in the range for a while. So what I wanted to do was get out expecting some kind of bounce, and we had this big sort of move overnight. which I was expecting there to be a load of buy limits at. There was buy limits at it because it pushed up, but it didn't sustain it. So, but now we've broken that low. So market structure shift is now official. We've got revert. This is easy to see on hourly. We've got the reversal alert, M pattern retest, and we've got a lower low. So we are now peak formation high, low. So we should be looking for lower high before we move down. So I am suspecting we're going to get more downside on this, but equally a move of that strength, yeah, that's a good 8-hour push in one direction. I think we'll probably get a profit take, but we could just get an accumulation drop on it. We don't know. No one knows, do they? So we'll see, but looks good. Celebrate the victories no matter what happens next. You've seen me having off the chart days in here. Yeah, we're at, look at that. Bank 2.69%, lost 2.87. These days are very rare, very rare. Losing days for me are very rare, as you know. Losing weeks happen, losing months just as rare. But you know, this is what you have to do, and this is what I was doing yesterday when I was taking all this loss. I was sitting there every time I was closing the charts out. I was like, just a little loss, it's just a little loss. It's going to come back, because every time you take a little loss, there's another win around the corner. Every trade is a trade. Some of this is going to turn into profit today. I don't know what yet, because I don't know what the market's going to do. It doesn't look like it's going to be oil again. But you know, every trade is a new opportunity, and you just have to treat it as such. We've got a lovely accumulation going here at the moment. What I'm worried about today is a liquidity run down here, because we've pushed up. So a lot of people will have longed here, trying to fade this. Obviously, everybody's going to be the same as me with stops under the lows. So we'll see what happens today on this one, but could be an interesting day. ADRs yesterday, we had ADRs lit up all over the place, mainly on the yens again. So there's no ADRs today. I would expect it to be very quiet today ahead of the rate announcement. So I'm not expecting massive movements. We could well have a lot of up and down, but I'm not expecting too much directional movement this morning ahead of the rate announcement, because the speculators are going to want to keep their money tight until the rates are announced, until we know which direction we want to be putting that money. So we can see which ones have been hitting ADR all week by the weekly range extensions. We've got 2 monthlies, Swiss yen and US dollar yen. They've already hit their monthly ranges. We're only on the 8th of the month. So the Swiss yen particularly, this is the one I said I'm keeping a very close eye on. So we had a 225 and a 200 ADR. Was it 200 and a 225 ADR move? So we've had 400% move on this in 2 days. Absolutely off the scale. Everybody is scaling out of the yen dramatically, and I cannot still see why. Strongest currency today so far is the yen. The weakest is the pound. It's interesting, isn't it? Everybody's trying to meme revert the yen by the looks of things. So I can't see quite why this is happening. Apart from it's just money being pulled out of the markets, which happens. People need to pull money out to put it elsewhere. So I think today there's a very good chance that we're going to get some kind of retracement on this. There has been no profit taking on this entire move. You can see the wicks to the upside now. We've got bearish candles so far in Asia taking control. A lot of them. We've got very long wicks to the upside so far. We've got a shooting star going in at the moment, although it's not at the top, but it is still rejection of buyers. So there's a good possibility that we are going to get some kind of profit take move starting on this today. We've had the retest. We haven't managed to push much lower. If London takes it below this low, I think we could start a cascade effect here. So one or two things is going to happen. They're going to come and take this liquidity and run with it again for whatever reason, or we are going to get the profit take move starting today. And the profit take move could come in two forms. It could either be a pullback, probably into this accumulation, which is going to be a fairly big move, obviously. That's going to be a 200 move, ADR move to the downside. Or we're just going to get a kind of A-shaped recovery on this. And it's just a big manipulation move. Don't know. But watch all of these yens today. They're all petering out. For the last 2 days, literally, as soon as the market's opened in Asia, we've gone, London's gone, New York's pushed, yeah, Asia's pushed, London's pushed, New York accumulated in that case. But yeah, they're all off the chart. You know, Aussie's coming down at the moment. So there's a lot of opportunities on all of these for shorts, but you know, look at where you are with these. I mean, look at the pound. That's just a rocket. 560 pips. It's 140 ADR pair. It's moved 560 in 2 days. It's just astronomical, these moves. They're all undoing now. So these are all good short scalps that you could have got on if you wanted to. I don't know. There's a few people I think have shorted this, but bear in mind long term what you are trading against. Yeah, just be careful. Pound yen, we covered these yesterday. The pound yen and the euro yen are the only ones that had upside resistance. Everything else, you're up in the clouds with no real way of telling where these things would potentially stop. So lots of opportunities today for shorts on all the yens and yesterday, but you kind of, as I suspected might happen, you kind of had to take these in Asia to really benefit from them. Obviously, I'm not awake in Asia, so I'm just not interested in the yen at the minute with it playing these stupid games. But you've got a lot of downside on these. You know, if you want to use these for stop positions, any break of the Asian lows, stop above the highs, you'll easily get a 1 to 2 to 1 risk reward out of these, I would imagine, if they're going to come down and the profit take move is going to start. So they are worth taking. I'm not taking them myself at the minute though, because I need to get on top of what's going on with these at the moment. So there's no ADRs today, but look at your weeklies. You've got Aussie dollar yen, CAD yen, Swiss yen, Euro yen, pound yen, US dollar yen, and New Zealand dollar yen. Literally every yen pair off the scale. And we're on Thursday now. So, and the monthlies obviously are the Swissy and the US dollar yen. So biggest ones. We got a reversal actually on that one yesterday, which is good. So lots of, you know, you're going to have targets galore down here. Big bank of inefficiencies to go and sort out down there. So we should get some decent drops on all of those. RSIs, the 1 hours, we've only got the euro. I should do these the other way around, shouldn't I? But, the 1 hours, we've got the euro, pound, and the Swiss yen. So Swiss yen is still extended on the hourly, which we'd expect it to be because it went way off the charts. And that support rectangle is holding up at the moment now. So I say you want to wait for this to break. When that breaks, well, I think we'll get a decent move. But at the moment, this is just holding up. Needs to get that accumulation push, so just be careful with them. And the euro pound, again, not really trading euro pound at the moment. Euro is pushing, pound is weak. You could well get a nice trade off of this one this afternoon if the euro comes down, but I don't think it's necessarily going to go anywhere. We'll see what happens with the rates. A big question mark at the moment. So for 4 hours, Aussie Swiss. Again, Swiss, the ones you've got to be careful of. These are obviously all nicely extended on the 4 hours. So this is the 4 hour side of the RSI dash, and this is the 1 hour side of the RSI dash. We've got the Aussie Swiss franc affected by the euro rate, CAD yen, Swiss franc affected by the euro rate, euro affected by the euro rate, euro, pound yen, and New Zealand dollar yen and US dollar yen. Yeah, so for me, these three are not going to be affected necessarily by news today. everything else on here is potentially going to be affected by the news this afternoon. So these are very, very, very extended, obviously. CAD yen, actually, sorry, won't be affected by the news this afternoon. So these are all very extended, but bear in mind, if you're going to take any positions on these today and the news goes against you for any reason, you're going to be potentially in a little bit of trouble. But if you get into these with the view to mean reverting them and it pushes, you are getting into something like Swiss yen, for example. Let's look at that one as an example of what might happen. Swiss yen, 92. That's probably one of the highest RSI extensions I've seen this year. Swiss yen, 92. If this gets a pump off of the euro rate announcement and it goes up further, this thing is not only extended now with no profit take move whatsoever, so everybody in here hasn't taken their profit, they're going to get pushed even higher. Do you think up here they're going to want to take some profit, or do you think they're just going to hold it and then let it go against it? They're going to start taking profit. So if you get embedded up at the 90s up here, I don't think it's happened. Yeah, so there we had it up, very similar sort of area here. We got another push up and then we got that move back down. So if it was to do that additional move there, at some point you're going to get that profit take move starting. But because it's so extended, obviously, you're going to get embedded if it pushes higher, which means it is at some point going to put in that reversal and come back down again. So you've got to bear in mind, if you are going to mean revert any of these Swiss or Euro ones, you are either going to make money today, right now, this afternoon, or potentially you're going to go into a squeeze on it. So if you're taking first positions, it's not too much of a problem. If the euro come out and put those rates up to something like 2%, you're going to be stuck in it for a while. So for me, I just want to not be on the euro at the moment. I'm in Euro New Zealand already, but I wouldn't necessarily want to take any euro pairs on. What's the pair of choice to trade the ECB news, would you say? If you're going to scalp it, euro US dollar is, I would say just because of what we've got coming up, because we've got Powell talking after the press conference, it depends how long that press conference goes on for as well. Euro US dollar is probably the best because you're going to get the most manipulation happening, because you've got the euro being manipulated and then you've got the US dollar being manipulated. The Euro US dollar is the most liquid pair that we have in Forex. So it has the slowest moves. Yeah. So we tend to find Euro US dollar, because there's so much liquidity in the market, it's quite hard to move the Euro US dollar. When you look at something like the Euro Yen, that is a lot easier to move because you've got the yen market being manipulated during Asia. So any manipulation that happens during London and New York is typically on the euro. So we get the euro moving the market during one session or two sessions, and then it goes quiet on the euro and the yen starts to move. So you have less liquidity in the market during the euro and the New Zealand, the euro and the London and the New York sessions. So therefore you get more chance of something moving faster. So from a news perspective, Euro US dollar would be my choice. From a liquidity perspective, something like Euro Yen or Euro New Zealand or Euro Odd, because you're going to have less liquidity sitting on the other side of the currency, which means it could move faster. But either way, it's all down to whether or not they actually decide to move the euro massively this afternoon. But if you're going to be scalping it and trading it, you want to pick something that's moving, obviously, and any of them should be good to move. So I would go with Euro US dollar really, but you'll get less. It'll be harder for it to move, so you kind of need a bigger lot size. It'll be more stable, and that's really what you want. And something that's going completely crazy. It's horrible trading something that spikes like that, because you're going to get whipsawed out of it. You've got something that spikes like that and pushes down. You see it, it sort of pushes down and then it pulls back a bit, and then it pushes down and it pulls back a bit. That's because there's high liquidity and it's difficult for the market to move it back. When you've got something with low liquidity, when the profit take move starts, it tends to move a lot further. So therefore you get more whipsaw. If you look at it on the 1 minute chart, something like the euro yen will be more whipsawy than the euro US dollar. But that's if you're going to news trade it, obviously. So, right, so looking at these extended pairs, Aussie dollar Swiss, we are down at these lows. We've just basically cracked the lows yesterday, and we're in a range. So this is exactly where you want to be buying the Aussie dollar Swiss, but we may well get news affecting the Swiss franc this afternoon. So this is a really good spot to start buying from, and you've got this low. However, personally, my bias on this one is short. It is very extended though, so it's a good looking little long opportunity down there. You need to bear in mind what's going on with the Swiss franc. So we may well have a euro pump. If we get a euro pump, we'll have probably a Swiss pump, and obviously the Aussie dollar is going to come down. Aussie dollar Swiss is going to come down. Yeah, so that would be my sweet spot, if you like, buying it down there, if it was to be able to get embedded enough to get down there. And obviously, if we get that news this afternoon on the euro and it's positive, and we do get the Swiss franc moved heavily with the euro, and again, these are all ifs, and we get a 175 ADR hit, that's where I want to buy it. So it would be a good buy down there. But again, it's a counter trend buy. So you have to answer the question yourself. Do you want to be taking counter trend trades? CAD yen. So all of these yens we've looked at, these are all starting to roll over. They are very dangerous. Short. Yeah. If you asked a class of 5-year-old kids whether this is going up or down, what do you think they would say? And it's very difficult to take a short on it. From a mean reversion perspective, very high probability of that happening. Yeah. Why it's happening, I don't know. That's what is making me sort of and ah about all of these yen pairs, because I don't quite know what is causing this reaction on the yen. I know they're in trouble, and I know they're still doing their bond purchasing and their yen purchasing, and they've said they're unhappy about this and they're going to do something about it, but they never do anything about it. So I can't really see any reason why this would come down. If this is pure manipulation from speculative dealing desks, then we'll get a profit take move on it. I don't know what it is though, and I can't find any reason. So it's making me and ah. But all of these are good potential short opportunities. 15-minute reversal alert, not going to get one on there. CAD 5-minute. You're just about to get the 15-minute on the CAD yen. The Swiss yen we've looked at already. Again, the same thing, massively extended. We are holding up. The hourly and the 4-hourly are holding up. The support rectangle is holding. We have got lots of wicks to the upside at the moment. So there is a lot of selling pressure on this. There's a lot of people starting to enter shorts. Why hasn't it gone yet? Don't know. I would expect profit take move to be fast, climbing up the stairs or falling down the elevator shaft. It's not happening. So, what you don't want to happen is this massively extended RSI to be down at 50 because you've gone into an accumulation, then pushing up again, next leg. So just be careful with them. These are the types of trades that you need to be using stops on. So if you're going to get into these and you like them short, and I do like them short, it's the sort of thing I would put a pending order under the lows and stop above the highs. Not look for the earth on them, But if it starts to come down, don't forget you can add to your positions. So if you get into that trade and you get a big bearish candle, add one, bring your average up, and then bring your stops down. Because if that momentum that caused that is going to continue, it's not likely to come back up and retest this area. So, you know, you want to be taking a short, and then if you get that pullback and short again, short it again. Yeah, short it again and add to the position and build a position short, and then get out somewhere in wherever we think it's going to stop. You know, it could return to origin. If this turns into an A-shaped recovery, you know, we've had plenty of those in the past, haven't we? So yeah, you know, I don't know what to do with these yens. I'm thinking about them, and I'm kind of waiting to see what happens with oil, because that's going to make my decision. Oil at the moment is just not going anywhere today. We're stuck, which isn't helping my decision-making process. So that's, if that oil was to push up to there and yens haven't moved yet, I would be looking to take some yen shorts. But at the moment, I'm just too exposed to sort of get into them. So Swiss yen, we've got the euro odd. Again, nice extension, very extended. We've moved up above the 72. We have taken out that high, and we're now running into this balance. So we're in a massive area of balance where we tend to find chop. Obviously here we've got the news this afternoon, so we could find ourselves up here at 2 or 3 o'clock this afternoon. We could find ourselves down here. If we find ourselves doing that, I suspect we're going to drop. So again, until we've got this afternoon out of the way and I've seen what the market's initial reaction is to what those rates are, I don't know what I want to do with any euros. What I'm hoping for this afternoon is the market is them to keep the rates at what they are forecasting, come out at 1.25, and for the market to go, nah, don't like it. So I don't mind if it spikes and then it comes back, or if it accumulates. If it starts to drop, obviously I don't, that's brilliant, because I'm short Euro New Zealand. But what I want it to do is either accumulate or negatively react to a rate increase that is forecast, because then I think we are probably going to see this continuation, and this is just a pullback. So we will see on Euro odd, but yeah, very extended to the upside. We've been looking for short opportunities on it. If it was any other time and anything else happening with rates other than what they're doing now and the speculation of higher rates coming, I would be shorting this. But I want to see what the market does. Euro yen we know about. Obviously that's the same thing. This one's coming down very nicely this morning. So we've had the reversal alert and the retest. Look at that market structure. Textbook. Could class that one, can you? So yeah, absolute textbook. Lower highs, lower lows. But bear in mind, a lot of people will be seeing this as a flag, and there'll be a lot of buyers ready to jump in when that flag breaks. If it breaks. If it doesn't break, it's coming down like a house of cards. Okay, Trevor? Whoever it was, no, it was Andy yesterday, wasn't it? I was looking for analogies to use. House of cards, there we go. Better than tarts knickers, which is the one I use. Euro New Zealand. That's the one I'm short in, so of course that's the one that's pushing. At the moment, we are up above these highs. We're still hovering today. I suspect today we will just do that until the news is announced, and then obviously we'll see where we're going from there. Pretty good market structure on this. It's very, very up and down. You know, we just, you're going to find with anything that you're trading a euro pair against an Australasian pair, you're going to have good market movement, because one will take over during one session while the other one's asleep, and you get decent movement, which is why I like Euro odd and Euro New Zealand. But at the moment we're up to the highs. 4 hour just about extended. We're just about to come out of extension now. We're dropping below the 70 level. So again, we've got divergence showing at the moment. So it's bearish divergence, and we're coming up into a nice area potentially of resistance, but that's going to mean absolutely nothing if the rate announcement comes out, the market will go where the market wants to go. So we'll wait and see what happens with that one. Not extended as much as these yens, obviously. Pound yen, you've missed it. There's my alert yesterday. Okay, so this went off yesterday. Sorry, this morning, rather, while I was asleep. And obviously I missed it. But this is the area I said I was looking to short this, and I was asleep. So I couldn't do much about that one. But that one's already started to play out. We're almost down at ADR on that. So if you got into it in Asia, well done. But the pound, obviously, we've got the woman that's not Theresa May basically announcing what's going to happen. So when Liz Truss is talking about the plans to get over the fuel poverty crisis that we've got at the moment, and the bills spiraling out of control, we will probably see a pump. It's all been released, what she's going to be doing, what she's going to be saying, and the market will probably have a reaction to that once it's actually said. So she's doing it as a debate today, I think, in the House of Commons. So I'm not quite sure what time it is, but it will be coming up on Financial Juice. So keep your eyes peeled on Financial Juice. I have this as a desktop alert. So anything basically that comes in red comes up as a pop-up alert on my desktop in Windows. So turn those alerts on, and just make sure you know, because when she does announce that, that will probably be red news, and that's when you'll probably see those spikes starting to come. So kind of missed that, and that's obviously going to come out of extension. Well, it might not do, actually. Might obviously get extended again. So, but it's a lovely area of resistance we tapped into there. So short opportunity missed on that one. New Zealand dollar yen is coming down as well. Again, we've got a level that we're running into here. So you can see these levels. Basically, we're just moving from support to resistance to support to resistance. We've just come back and tapped straight in to that level. So if we're going to get a continuation move, we may well be coming down to here. We could come down to here. So there is potential downside on it, but potentially we could be looking up. Obviously, this is bullish. Everything's bullish against the yen at the moment. So like I say, these are all counter trend. If you got onto them this morning in Asia, well done if you were awake. But yeah, they're risky. So just be a bit careful with them. And the good old US dollar yen. So US dollar yen, we've hit highest level for ever. Yeah, we're off the chart. Yeah, we don't have anything. There we go. We've got a level coming up there, which is 1998. So that's back as far as my charts go on the monthly. So potentially that's next stop. Whether or not 147 is going to be allowed by the Japanese banks and government, I don't know, but that is where I suspect. Goldman Sachs yesterday increased their forecast on US dollar yen to 147, which isn't far away, which is there. So that is the 147 big round number. 147.745 is the 30-year high. So, you know, we're getting to points we haven't been to before, and this is why I say you got to be careful with these. We're in uncharted territory. There's no real support or resistance levels that we can look at to the left where we might think price will react. So price will go where it wants to go. So you're kind of in a free area here where we could pull back and then run up to it. We could just run up to it. There's all sorts of stuff that can be happening up here. But at the end of the day, we are in an uptrend. So you want to be looking for long opportunities where possible. If you're counter trend trading, you need to be on the ball and not being greedy and scalping small amounts where you can. So for me, yes, there's a high probability we're going to come out and pull back. But equally, we could just get down to here and go for it. Don't forget, we've got Powell talking this afternoon, so they could be rallying the market. Are you off, Trevor? Off to find that one good trade. I've already done mine. Mine was on the DAX this morning. I didn't get onto it big enough, though, unfortunately. I should have shorted it harder than that. But I took $300 out of it. Nice little scalp for the morning. That's it basically on the RSI extensions. As I say, just, with everything today, if you're getting into something new, just bear in mind you're getting into something ahead of a major news announcement that could fundamentally shift all currencies. Because if this euro rate comes out super high, everybody's going to pull money out and pump it into the euro, which means everything is going to drop. So it's interest rates, as expected, will tend to affect the currency. Interest rates, not as expected, will affect everything, because you'll have money being pulled and pushed all over the place, which is why we see on things like non-farm payroll days, everything moves. It's not just the US dollar that it affects. It affects everything. With big interest rates, they will affect everything because money has to be moved from A to B to make things happen. When things like this happen, the hedge funds particularly are paying massive attention to these. Hedges, the vast majority of trades taken by hedge funds are to hedge large commercial transactions. So a manufacturing company in Japan ships goods to the US. It takes 3 months from manufacture to invoice payment. They have to hedge what the difference in the US dollar yen is going to be over those 3 months. So they would go to a hedge fund and give them 20 million yen or $20 million and say, this transaction is going to make us X. We need to make sure that if the interest rate changes, we need to cover ourselves. So you need to short it by Y. And that's what the hedge fund will do. If there is a euro hedge on at the moment and that interest rate changes massively, which changes the direction of the euro, the hedge funds are all going to have to change their hedges, which means everything will come out of the other side of the euro hedge. If a US company is transacting with euros, the US will have money pulled out of it. If there's a Japanese company, the yen will be affected by it. If there's a UK company, the pound will be affected by it. So these things, this is why everything moves. It's mainly hedge funds repositioning to make sure that their customers are covered on their hedges that they have. Their job is to deliver that hedge effectively so that the company doesn't lose money on exchange rate transactions. That's what hedge funds are for. So these will affect them. So you've got to obviously pay attention to them. If it comes out as expected, the hedge funds will be doing very little because, and this is why you don't see much movement, because they were expecting that, and that's what they've done with their hedge. They only have to adjust their hedge if it comes out as unexpected, which will move the currency in one direction or the other. If they drop this, if it comes out at 1%, I'm pretty sure the euro is going to tank. Yeah, so there'll be a lot of money coming out of the euro and going into the hedge in the opposite direction, won't it? So yeah, bear in mind that's all happening this afternoon. I will come on at 1:05, 1:10, something like that. I'll schedule it for 1:05, and then we can have a look at what's happening. I might try and trade some as well. See if I can get some scalps in. Again, depends what happens this morning, really, as to what I need to do today. But nothing much is going anywhere at the minute, which is kind of expected, apart from the indices. Oh, actually, let's quickly look at the indices before we go. So Dow, yesterday I was trading like a maniac. We're in a pullback at the moment. So if you look at the moves we've had, pullback, yeah, drop. So I'm expecting downside momentum on this particular route at the moment, which is why I was looking for a down day this morning, and they've all done that this morning, which is good. S&P 500, same sort of thing. We've had nice pullbacks on this. So looking for next leg down. Market structure is lovely at the minute. Very, very nice and orderly. So we're just looking for next leg down to start in an orderly fashion. And same with the I've got a sell stop in there. Let me just get rid of that. It's an old order. And the same with the DAX. As I say, the DAX has already started its downward move. So nice market structure playing out at the moment. So I would say that is more so just a protracted leg basically down next. So started this morning. I'm looking for that leg down, just taking some profit off down at the lows in a minute. But yeah, so as obviously business as usual on these, it's going down. Everything's going down. Right, so I'll be back on this afternoon, and we'll have a look at the rates. Maybe trade some euro, US dollar or something. Might actually trade a little bit of DAX because we'll get a lot of movement on the DAX. I've got positions on that, but I might try and scalp some DAX as well. I'll see what the price action's like. We'll see what happens. Basically, you know, it's one of those things you just got to watch it, see what happens with it. If you can see a good opportunity, you know, this comes out at 1.25 and we see the euro go like that, I shall be fading it. So we just have to see what happens and play accordingly. But my positions at the moment, obviously, are those, and I will be managing them. I will be out of oil this afternoon or today at some point, one way or the other. It's either going to pump or it's going to dump today. So I'll either take a loss on it, and plan will be to scalp it back. So I'm looking at something like a 2.5% to 3% loss if we break the lows on oil, which is not far away, but it's holding up. No, it's holding in. It's holding in there. Look. If we got a double bottom on that today and a push back above that high, that would be absolutely fantastic. That would be my dream move for oil today. Come and grab that liquidity without taking my stops, and then off you go. Dreaming. But yeah, so whatever I do with that today, I'll be looking to scalp it back. So I shall be probably doing some indices scalping at some point today. Just try and get the books balanced. But everything else in the hands of the euro rates. All right, so I will be back this afternoon about 1:05, 1:10. If you've got anything you need, come to the Telegram group. I shall be in there. Yeah, we'll see what happens this afternoon. Hopefully you can join me for that, and we'll see if we can make some money this afternoon out of the euro. All right, so have a good day. Don't expect anything to move much, and I will see you this afternoon. Have a good one.